So let's talk in practical terms about how central banks or the Federal Reserve actually target the short-term nominal interest rate. The way central banks go about pursuing policy these days is they announce a target for the interest rate that they want to hit. And in order to hit that target, what the central bank does is it just accommodates fully whatever shifts occur in the demand for bank reserves. So in this case, we're thinking that the target federal funds rate is this R hat F. If the demand for reserves rises, well, that would tend to want to drive the interest rate up above this target. And so what the Fed does then is it expands reserves by conducting open market purchases. On the other hand, if there's a decline in the demand for reserves, then the Fed contracts reserves through open market sales. So the way this would show up in the market for reserves is, suppose that this lovely color here is the federal funds target. So that's the R hat F. Now, if there's a sudden increase in the demand for reserves, well, if supply just stayed at this S0, then that would tend to drive the interest rate up. So what the Fed does is it expands reserves and shifts the supply curve outward. That ensures that the federal funds rate will remain on target. And then an analogous thing occurs if the demand shift is in. Then the Fed will contract reserves in order to keep the funds rate here. So you'll notice that what the Fed is interested in is maintaining the interest rate at R hat. And the level of bank reserves is of secondary concern to them. They basically are supplying whatever level of reserves is needed to maintain this federal funds target. So it effectively then, the supply curve for reserves is just perfectly elastic, because that's how you would guarantee that whatever happens to demand doesn't have any effect on the federal funds rate. Now, in practice, the way the Fed does this is the New York Fed has rather sophisticated methods for trying to estimate what the demand for reserves is going to be. And they use those estimates to determine exactly what open market operations need to be conducted in order to hit this R hat target. This R hat target is determined by the Federal Open Market Committee. And as I said earlier, they do this with an eye toward what's going on with economic activity, employment, GDP growth, as well as what's happening to inflation.